Hi all, Tony here. US equity markets gained on Friday, led by tech stocks after strong earnings from Micron Technology helped ease concerns around lofty valuations and high debt levels within the AI complex. Looking ahead, the focus in a holiday shortened week will be on the second estimate of Q3 US GDP. Now, due to the federal government shutdown, the BEA cancelled the advanced estimate for Q3 and will combine it with the second estimate this week, effectively serving as the first official print. Market expectations are for a print of around 3.2%, which would confirm the US economy was on a very solid footing before the government shutdown began on October the 1st. Let's take a look at the charts of the Nasdaq and S&P 500 to see where they are as we start this new week. Right, so what we can see with this Nasdaq daily chart is that the correction from the October high here at 26,182 is continuing to twist and turn, and we could potentially be able to say that this is the end of the correction down here at 23,854, or we could be waiting for more price action within this triangle to complete the wave four. Either way, it doesn't really matter, and we don't want to get bogged down too deeply into the Elliott wave counts here. What we want to be looking for is signs that support the idea that in this seasonally bullish time that the Nasdaq is breaking higher. Now, the first indication of a break higher for me would be a break above this trendline resistance coming in currently around 25,750. Now, this level is reinforced by this 25,835 high from the 10th of December. So if we can see the Nasdaq start to push up to this area here, you'd be looking for a retest of this October high, followed by a potential rally up towards 27,000. Now, until we see these breaks start to unfold, this Nasdaq correction can continue to play out. It may be, as I said, complete down here. It may need to continue to trace out between these levels here before it makes up its mind. But we're really trying to be mindful that it is seasonally a bullish time of the year into the end of December, and also that January is a very bullish month for US stock markets as well. So we're looking for reasons to be long or to be square. And the reasons to be long are, as I mentioned to you, a break of this trendline resistance and a break of this high here initially. Now, with the S&P 500, a similar situation. This correction has unfolded largely between 6,900 and 6,550 over the past couple of months. We don't know whether the correction low point is in place or whether there's still another test of this area to go. But what we do know is that if it can start to break above this trendline resistance coming in around 6,900-ish, reinforced by this 6,903 high from the 11th of December, then you would probably start to be thinking, okay, we're about to get a break higher. The correction's complete. It can test this 6,920 high. If it breaks above there on some sustained volume, then that would start to support the ideas we're seeing this strong seasonal rally take hold, and that it can test initially this 7,000 area up potentially towards 7,100 into the end of January. That's all for this market update. Stay tuned for more ahead.